So hello YouTube, I hope everyone is doing fantastic. It's KLFX here and I'm back with another one. So in today's video I'm gonna talk about a very good scalping entry model. It's actually one that we use consistently on the mentorship. I'm just gonna quickly do a quick overview on a trade that I called and caught, I caught and called beforehand for the students on the mentorship. Actually, it was a very good sell on EUR-USD. It's actually one of the trades that we've caught so far during the month of June. So basically, I'm going to talk about structure reluctancy because I saw that a lot of people, when they came to my DM on the Telegram, I saw a lot of people not understanding what it means about structure reluctance and how to take trades based on structure reluctance, because it's something that is actually very common in the markets. So basically, structure reluctance basically is sometimes you have price pushing to the upside. So this actually is a bullish trend, right? So price just broke the previous structure high and then it pulls back. Sometimes it can come to another block here and then it continues to push to the upside. So we have another break of structure. So right here up to this point, the structure order flow is intact, right? The bullish order flow is intact because we're seeing price breaking the highs, protecting the lows, coming back to mitigate the order blocks. But sometimes price may pull back into an order block and then starts to push up and then it doesn't close above, right? There is some sort of reluctancy here. It actually is price rejecting higher prices right here to close above the previous high. So a lot of the times what happens is that you had this previous high, then this previous low, and then this previous high. Then price pulled back, created this low. The job of a low on a bullish trend is always to make sure that price goes to the to the upside, break the previous high to maintain the overall bullish order flow. So when this low actually failed to cause price to break the high, this low becomes weak, right? We consider this to be a weak low because it failed to do its job, which was to create another high. So at this point, we consider this low to be weak, and most likely we're going to see sales coming all the way down to violate the overall bullish structure. So a lot of the times, instead of us having to wait for example, I know a lot of people have to wait first for the change of character, which is the break, so then can possibly try to enter somewhere here and then take the sell. Sometimes when you see the reluctancy, this actually can be an opportunity for you to ride the chalk creation, right? While price is trying to create the change of character, sometimes you can catch nice lower time frame opportunities here that you can ride this push to the downside, because a lot of times it tends to come with huge volume, right, before price finally pulls back and then continues to push on to the downside. So that's basically part of this video, what we're going to look at. Same thing with the sell situation, right? You have a break of structure, price comes back, mitigates another block, continues to push all the way down, but eventually it comes to another block. For example, it can be this one, and then it starts to struggle to close below this previous structure low, and then eventually creates this change of character, which is a reversal of the previous trend. So a lot of times, sometimes you can have nice opportunities right here that you can buy up and ride this change of character creation that comes with a lot of volume. So that's basically it, right? Reluctancy usually, for example, bullish reluctance is when price actually is failing to create a higher high. Bearish reluctancy is when price is failing to create a lower low, right? Basically, it's failing to maintain the overall bearish order flow, and then the change of character comes. So sometimes the structural reluctance can be a sign that the bullish, for example, a bullish reluctance, it can be a sign that the bullish sentiment in the market is in depletion and sellers are actually stepping into the market. So we're going to look at this, a very good scenario right here on EUR-USD, and we're going to quickly look at it from the daily time frame. On this one, if we look at EUR-USD from the daily, on the daily time frame, we can see that EUR-USD is actually bearish. This major change of character actually is the weekly, right? This is the weekly change of character. Price comes to the weekly point of interest, creates this nice daily order flow. So if we look right here at the daily time frame, we can see that the structure is bearish. So the bearish order flow is intact. Now, price ended up pulling back all the way into this extreme, right? So it came to the extremity of this previous structure high, and now we're expecting to see that push to the downside. So right here, once it came to my daily supply zone, I ended up dropping down to 4-hour time frame. Okay, so when I came to 4 hour, what I saw is that, okay, the structure up to this point is still bullish up to this point. If we look at the structure, we can see that just looking at the swing structure, we had like this low, high, and then price made this low before it finally broke to the upside into that daily supply zone. So what I'm waiting for is actually the 4-hour change of character to the downside to look for sales. But what happened is that I ended up going to medium time frame, right? So this is the 4-hour. I said, okay, I want to see price coming down to this 4-hour demand zone at least, because up to this point I know 4-hour is still bullish. So if I'm going to look for sales, it can be on the medium time frame as a way to ride price all the way down to the demand zone, and then we're going to see if this demand is going to hold so price can continue up, or eventually it's going to get violated and then we have the structure shift, right, the reversal. So basically the idea behind the sell scalp that I had right here is we just wanted to ride price all the way down into this 4-hour demand zone. So what I did is I came down to medium time frame, right? So our higher time frame as an intraday trader is going to be daily 4-hour, medium time frame, M30, M20, M15. So when I looked at what's going on right here, I looked at the structure, I said, okay, we have this major structure high, we have this low, we have this high, and then we have this low. So I started to see price trying to push up, but eventually we can see that I was expecting to see price continue up to take out the previous high, but eventually it started to create some sort of internal change of character. So I said, okay, maybe this low is going to be weak, is getting weak, right? Which means that eventually it's going to be liquidated. So I'm expecting to see price at least pulling back into this, taking out this low and come to the 4-hour demand zone, and then we will see if price will either continue up or create that 4-hour major change of character. So that's basically what I did. That's what I was looking for when I came into the charts. I actually came exactly at a couple minutes before London Open. That's basically my trading window. I like to catch London Open and New York Open as well. So I said, okay, we have this high, we have this low, and we're seeing some reluctance here. Price actually failing to continue that push up right here. So eventually this low is bound to be liquidated. It's weak because it's failing to do its job, which was to push price up to create the high. So I want to, at least if I'm going to sell, I just want to sell at least towards this 4-hour demand zone. That would be the last target. So what I did is I said, okay, medium time frame, I'm seeing the reluctance. Let me drop down to 4 minutes time frame. That's the time frame that I used, but you could have used 3 minutes, 2 minutes, 1 minute, no problem. Usually I just like to use the 4 hours, 3 hours, the 4 minutes or M3 just to filter the complexities, right? So when I came right here, you guys can see this actually was, London Open right here, right? 8 a.m. It was London Open. What I saw, okay, we have this little high, low, and then a high. So we have a break of structure, mitigation, second break of structure. So that's the shift. That's that. Basically, I'm following the overall bearish order flow, right? So we're seeing that from up here, we had this break, price ended up pulling back, and then created a second break of structure, pulled back. Then it created the third break of structure, and then I said, okay, I want this point of interest right here. So basically, I'm just following that bearish continuation all the way down, right, on the lower time frame. So coming right here, I saw this nice break, mitigation, second break of structure. That's the two-step process that I need to see, right? I need to see this break, then we have a mitigation, then we have a second break of structure right here. So this is going to be the mitigation line, and then we have the order block. I can enter right here, and then we can sell all the way down, right? So I waited patiently for price to come back into this order block right here. That's the POI that I had marked. And you guys right here at the right, you guys can see that I sent this trade beforehand for the students. And you also can see the sell limit that I sent, right? So just to see that we take these trades together, we win together, we lose together, we break even together. That's the most important, right? So as I just waited to see price coming back into the order block. Right there, it didn't tap the order block, so we remain patient. So right here, that's when price came back. You guys, if you guys can see right here on the right, still there is the price when I sent the limit. I think it was somewhere at 65 and 1 pip stop loss. I believe it was something like that. But I sent based on the seconds time frame confirmation, right? That limit was based on the seconds, because usually I want to make sure my students have a very small stop loss with a huge risk to reward ratio, right? I think it's very good because it can make it worth your while, right? So you can actually, you don't have to trade as much. Once you can catch a very good risk to reward ratio, you can be done for the week, right? So, and actually it can definitely help you also on your challenges, right? So you don't have to feel like you gotta trade there all the time. So that's when I sent the limit right there. You guys can see I sent 108,765, 1 pip stop loss, and just targeting the M3 previous low, which was our first target, was 1 to 6.5. Okay, so I mean, on your challenge, if you're risking 1%, this would have been 6.5% return on the investment, right? If you just, I mean, decided to be a little bit more patient. I mean, it depends on your risk appetite, on, you know, on your greed levels. If you want the 1 to 10, I mean, for example, let me just keep playing price. You guys can see it, price easily smashed the TP right there. I mean, beautiful 1 to 10, 1 pip stop loss only, right? And it's very good. I mean, there are some prop firms that, you know, you have raw spread, but for example, if you had, let's say you trade in a prop firm that has a bigger spread than EUR-USD, sometimes it can be, I believe, 0.23. You can go with 1.5. I had students that also went with 1.5, some people 2.5, and target 1 to 5. It's very, very good risk to reward ratio. So imagine just right here, risk 1%, you back 10%. And I mean, this trade right here, it just took about 48 minutes, basically. I mean, to hit the 1 to 10, I think it was just 28 minutes. So that's basically 28 to 30 minutes trading window, and you're done for the day. You're up on your challenge, and you know you're doing good. And this is actually a very, very repetitive concept that we trade every single day on the mentorship. So that was the trade that I called. My entry actually was somewhere above, I believe. I think it was the broker also, but I ended up entering right here. 1 pip stop loss as well. Now my target, just going quickly back to M15. I had a 1 to 10. I mean, I think I took my 95% volume off of 1 to 9 point something, but I wanted to see these lows right here. I mean, this low and then this low. Ultimately, I was just wanting to see price come all the way down to this one right here for like 1 to 17.8, but I just left a little bit. After I took 95% volume and 1 to 9, I just left like minions. I think it was like 0.02 lots, just to see how far price could go. And if I keep playing price, price eventually came all the way to that previous low before it ended up reversing. I think, yeah, it ended up reversing. But I mean, we can see that price eventually came back to take out that low. So basically, we just wanted to scalp to take out this low. This was a weak low that created the inducement. I mean, the reluctancy that we were talking about at the beginning. So if we come back, for example, this actually was a trade that I caught a couple weeks ago. So let's look at what happened later on based on the analysis, because we wanted to see, we saw that price actually came to a 4-hour, to a daily supply zone, and we wanted to see that 4-hour change of character, right? So you can see right here when the news kicked in, it just created all that 4-hour change of character, to really follow what was the higher time frame intention. The weekly is bearish, the daily is bearish, so 4 hour definitely needed to turn bearish. So if you come to 4 hour, everything now is absolutely bearish. We have this nice change of character up to where it is today. So let me just delete this, and we can see that the overall structure is just absolutely bearish, right? We just had this nice swing, change of character, price actually made a nice pullback, and then we have a second break of structure. So it's just following basically what the higher time frame was already showing from the weekly, right? Which is bearish, daily is bearish, 4 hour is bearish. So on the medium time frame, it just rests us to be bearish as well. Okay, so right here on the right, you guys have my entry on the trade. For me, I believe it was 1 to 17 risk to reward ratio trade. I mean, it was a very good one. It's a trade that I also called, sent and called beforehand to all my students on our lifetime mentorship. And I mean, I hope I really made the point clear with this scalping strategy, guys. If you guys have questions, feel free. My content is on the description box below. And right here, before I go, I would love to show you guys, I mean, the Discord group right here, so you guys can see we have the CalFX SMC Mastery course. Actually, it's a very good course. It explains perfectly the scalping method that we have, right? Usually the minimum risk to reward ratio we have is like 1 to 7, 1 to 8 as minimum, considering you're going to enter on M3 or M1 time frame. And it just requires like 30 minutes of trading window for you to really be able to make like a very good risk to reward ratio, right? Where it can be 5 times your risk, 10 times your risk in a single trade, right? I mean, it's very good for challenges. You can just take your time with it and then consistently build up the account. If you got 100K, you can risk 1% and if consistently make 1 to 5, 1 to 6. I mean, it's a very good capital for payouts, right? So that's basically the right here that we have the roadmap is the SMC Mastery course. We have the students group chat as well. I got some exercises also for those people who really want to practice the system. You guys have exercises that I usually send out for new students to do. We also have the trading sections right here and the breakdowns, right, and the community with books and everything. So it's a very good stuff right here. I mean, it's very resumed course, straight to the point, right? I mean, no need to overcomplicate stuff. You know, trading is not supposed to be something that we overcomplicate or in an attempt to be right. You know, just take your losses, take your win. But the thing about it is risk to reward ratio. That's what's gonna keep you in this business. If you have good risk to reward ratio, I mean, you're going to do good in trading because that's all you need, right? So I hope I made the point clear with this breakdown, guys. If you guys enjoyed the video, make sure you smash the like button. Subscribe if you're new to the channel. And if you're interested in joining the mentorship and with a 30% discount, feel free. There is a 30% discount on the lifetime, so feel free to just hit my DM. I'm always available. And I'm going to see you guys in the next one. Peace.